Mortgage Assistant Relief Services, also referred to as MARS, is important to mortgage loan originators as it provides a framework for ethical and responsible practices when offering assistance to distressed homeowners. MARS regulations aim to protect homeowners from fraudulent or deceptive practices by certain entities that claim to provide mortgage assistance but often take advantage of vulnerable individuals facing financial difficulties. For mortgage loan originators, complying with MARS regulations helps maintain integrity in the industry and fosters trust with the borrowers. By adhering to the guidelines set forth by MARS, mortgage loan originators can ensure they are providing legitimate and beneficial services to homeowners in need. This includes offering genuine loan modifications, refinancing options, or foreclosure prevention assistance with transparent and fair terms. By upholding MARS regulations, MLOs contribute to the overall stability of the housing market, preserve home ownership opportunities, and prevent predatory practices. It demonstrates a commitment to assisting homeowners in difficult situations while maintaining professional standards and ethical conduct within the industry. Moreover, compliance with MARS regulations helps protect mortgage loan originators from legal repercussions and reputational damage associated with engaging in deceptive or fraudulent practices. To clarify, a mortgage assistant relief service means any service offered to the consumer in exchange for consideration that assists the consumer with any of the following: stopping, preventing, or postponing or saving the consumer's dwelling from foreclosure, negotiating, obtaining, or arranging a modification, obtaining any forbearance, negotiating an extension on when a consumer may cure his or her default on a dwelling loan, reinstate his or her dwelling loan, or redeem a dwelling. Mortgage Assistant Relief Service also means any service offered to the consumer in exchange for consideration that assists the consumer with obtaining any waiver of an acceleration clause or balloon payment, or negotiating, obtaining, or arranging a short sale of a dwelling, a deed in lieu of foreclosure, or any other disposition of a dwelling other than a sale to a third party who is not the dwelling loan holder. MARS addresses the acts and practices of for-profit companies that offer to work on behalf of consumers to help them modify the terms of their loans or to avoid foreclosure, and specifically targets unfair and deceptive acts and practices of those who provide the services of a mortgage assistant relief service. Under the final rule, MARS providers must comply with the following. MARS providers are prohibited from making false or misleading claims. It is mandated that providers disclose certain information about their services. Finally, the section bars the collection of advance fees for the provision of MARS, except in certain circumstances for attorneys who collect them in connection with preparing or filing documents for a bankruptcy, court, or administrative proceeding. The following would result in a violation of the MARS rule: charging a client prior to getting a signed written agreement between the consumer and their lender, telling a client not to contact their lender, misrepresenting the time it will take to provide services, that the company is affiliated with their lender or the government, or that the consumer will receive legal representation. Additionally, advertising specific savings, benefits, or performance without providing proof of such would be a violation of this rule. Finally, attorneys who provide MARS are exempt from the advance fee collection as long as they are licensed in the state that the consumer resides in and deposit any funds from the consumer in a client trust account.